Hi, my name is Phil Grande at Phil's Gang, philsgang.com. I do a nationally syndicated radio show every day at Eastern Time, 3 p.m. And I want to share something with you that I shared with my audience. Inflation. Bernanke keeps talking about inflation. Inflation is cruel. It's almost as cruel as a payroll tax. Now, inflation, here's what he says about it. Listen to this.
Overall, inflation remains low. Measures of longer-term inflation expectations have remained in the narrow ranges seen over the past several years. Against this backdrop, the Federal Open Market Committee, the FOMC, anticipates that inflation over the medium term will likely run at or below its 2% objective.
Now, he's saying it's 2%. Actually saying it's 1.7%. We know it's not that. Matter of fact, he knows the government admits that food prices alone in 2012 went up 4%. It's going to go up another 4% this year. That's what they projected. Gasoline increased 46 cents a gallon in one day. They also know that peanut butter, look at peanut butter, 9%, coffee, 25%, movie tickets, 11%. So how can he say that there is 2% inflation? There's not. Here's why he does that. Remember, it's all about deficits. That's why there is inflation. Deficits. It means every day he spends $6 billion more than he takes in revenue. He has to go and borrow money. So to borrow money, he wants to make sure he borrows it at the lowest rates. So what does he do? He prints $45 billion every day and an additional $85 billion every month. He takes that money and he's buying treasuries. He wants to make sure the interest rates on his $6 billion he's borrowing is below 2%. That's what he does. Now, when he takes that paper and prints that paper, there's a problem. All those units of paper are just that, units of paper. And these units become worth a lot less. And if you take this unit right here, that means that when he prints them, there's a lot more of them going in this pile, which means they're worth a lot less. That's the problem with all this printing to try to keep interest rates low, and that's the point. Now, the other thing is when he expands this money, and we're expanding it rapidly, the value, as I say, of these dollars that he's expanding not only decelerate, but a 5 unit of paper, or $5 to purchase the same item that we used to purchase, let's say, $1 just 10 years ago. I mean, this is not good. And that means that the folks who are retired, they're getting killed. Seniors are getting killed. It's not working. So what drives me nuts is each time the Congress and the president know they're going to spend more money than revenue take in, they also know it's the poor and it is the middle class that's going to, that they claim they're looking out for, are the ones that are going to get hurt. See, that's what drives me nuts. They keep saying that they're looking out for the middle class and for the poor. How can they be looking out for the middle class and the poor when they're the very ones who know they're going to go spend more money than they're taking in, that Obama's got to go print money to maintain a low interest rate on the money he's borrowing? They know that every time. So how could he say he's looking out for the folks? He's not looking out for the folks. They're lying to you. Because inflation destroys the savings. It ruins their retirement, for heaven's sakes. This is the effects of their lifestyle. It just hits them. That's the problem, because it doesn't hit Bernanke. It doesn't hit the president. That's the problem. So every time you hear that Obama is trying to, listen to this.
I'm a warrior for the middle class.
He's a warrior for the middle class. He's not a warrior for the middle class. He's not looking out for the middle class and the poor. He's only looking out for himself. He's looking out for his party. That's all he's looking out for. So what does this mean? This means we got a tremendous opportunity in the stock market. Because for you who are fearful of getting back in the market because you're always afraid that the stock market is going to collapse, it can't happen. It can't happen. Why? Because do you think Congress is going to stop spending? Do you think they're going to stop borrowing? Of course not. So they're going to continue to spend. They spend 1.4 trillion more each year than they take in. The deficit they keep going up. The national debt keeps going up. And while that keeps going up, they got to keep on borrowing to keep interest rates low, right? And that means the stock market continues to accelerate because the stock market is addicted, like a heroin addict, addicted to low interest rates. And as long as this government continues to keep piling on debt, you've got a fantastic opportunity to get back in the market. What's going to happen is this. The market's going to continue to accelerate, but guess what? The economy is going to continue to decelerate because you can't create jobs when you have low interest rates, but you have debt. To create jobs, you got to have low interest rate and no debt. The only thing that's working is the stock market, and there is no way this market can come down. There's no way. It's impossible. The only way it's going to come down is when all those people who are in the stock or in the bond market, when they're going to get their face ripped off, is when this inflation is at such a point that one day it's going to spark such inflation that those yields, the interest rate is going to go from 2% to 3%. And that's when the stock market is going to collapse. It's going to be a bigger depression in 1929. But guess what? That's not going to happen for maybe 3 or 4 more years. When it does happen, we're going to know well in advance. Because if you're watching a chart like we do every day, and you keep watching the treasuries, you're going to have messages from the market well in advance. Remember, 1 year before the stock market crashed in 1987, we predicted it. We also predicted the stock market crash of the dot-coms. And in 2008, we predicted that a year and a half before, or 4 years before that happened. So listen, remember, you got an opportunity to get in the stock market like you never had before. We never had a safety net of this kind of debt. Unless you think, if you're scared in getting into the stock market, then you got to think this way. If you don't want to get in the stock market because you're scared it may go down, then answer this question. Do you think that the government is going to stop spending money? If you think they're going to stop spending money, then don't get in the market. You're absolutely right. Don't get in the market. But you and I both know that's never going to happen. So join the gang, Phil's gang. What an opportunity. See you on the charts.
For more information on Phil's gang, please go to philsgang.com or give him a call at 877-600-GANG. That's 877-600-4264.